Okay, good afternoon, everyone, and welcome to this presentation. My name is Ian Brown. I'm head of digital engineering at Quantum Capital Group. With me today is not Sandeep. Sandeep actually came down with a mysterious throat infection a couple of days ago, I think, to get out of doing this presentation. So that being said, Vishal Puri has stood in from our technology consulting partner, Tiger Analytics. And today we're going to be talking about how we use Databricks across our firm to de-risk and make smarter investment decisions. So I get that probably most of you haven't heard of Quantum Capital Group. We are probably not a household name, but we are one of the premier private energy firms, private equity energy firms. We are about 150 people based in Houston and New York, and we are the only private equity firm that focuses solely on energy investing. We invest across the whole energy chain, from infrastructure, thermal power, renewables, decarbonization, and also oil and gas. Quantum prides itself on its use of data and how we use data to make investment decisions. And we don't do that on our own. Whilst we've got some very talented people at Quantum Capital Group, and we're very invested in the Databricks intelligence platform, really, Tiger Analytics, our technology partner, help us. So I'm going to give Vishal a little moment to introduce Tiger Analytics, because some of you might not have heard of them as a technology partner either.
Hello, everybody. Thanks for the stage. Tiger Analytics is a data and AI niche service provider. This is all that we do. We live data and AI, enable modernized data platforms on Databricks, work across value chains with our customers, doing everything from building data science models, ML engineering, enabling agents, to building foundational data products, data assets. One of our strongest thing is how we bring value to our customers, as well as the flexibility we bring in our engagement models. So, for a private equity firm, the most important part is for them to be able to spot opportunities, act on those opportunities, evaluate those opportunities, and being data-driven is foundational to that. So, what Ian is going to talk about is going to be about how QCG has gone ahead and modernized their data infrastructure and enabled value across their value chain, and we have been a fundamental partner in that and humbled by that opportunity. Yeah?
Okay, so let's get to it. So let's set a bit of context, because this is actually quite interesting. The three charts. The first chart in the top left of your screen is probably the most interesting. What you see on this chart is you see that energy consumption across the United States has stayed largely flat between 1975 and about 2005. Then something strange happened in the energy markets. We started consuming a lot more energy. What happened? Steve Jobs created the iPhone. The cloud came about. EVs, Elon Musk brought EVs to the masses. Then we got into the whole world of big data, IoT, and connecting the internet. Then we got into the whole realm of machine learning. Then GPUs came along, and now, of course, we're doing lots of things, including cryptocurrency mining and, of course, AI, right? Who can forget that? So all of this requires a huge amount of energy. We are consuming more energy than ever before, and it's all because of the digital economy. Now, one of the other things you'll notice in chart 2, which is the top right of this slide, is renewables really aren't making any progress in making up the demand. The demand for energy in the United States is largely being fulfilled by natural gas. Natural gas is a clean burning fuel, which is replacing coal rapidly, which is a much cleaner, dirtier fuel. The reason why natural gas is being used over renewables are not a reliable baseload. If the wind doesn't blow and the sun doesn't shine, we don't have a lot of renewables. The other challenge with renewables is storage. You have to store that renewable energy in batteries, and the battery technology really doesn't scale yet to the masses. So natural gas is the primary source of energy that we use for electricity in the United States. So if you are charging your EV and you're charging it at a charging station, chances are the electricity you're using is coming from natural gas. The third chart's probably the most scary chart on this slide. What you'll see here is energy growth to date and energy growth forecasted. So if you think in the top left chart that the energy consumption demand has been going up pretty rapidly so far, it's only going to get a lot worse. And what does that mean for us? Well, that means in the US especially, we've got energy infrastructure challenges. we've got energy delivery challenges, and we've got energy reliability challenges. And the data center problem's not going away, AI's not going away, and also we're competing on a global scale for energy. As this chart shows, there's a huge amount of growth happening internationally. This is not just a US problem. So that makes energy quite an interesting place to invest. I'm sure some of you that read the news have noticed that Microsoft and Meta, they're already purchasing nuclear power stations to power their own data centers. This is a problem that all of the big tech companies know is here, and it's a problem they're all trying to solve. However, in the short term, we call it the transition fuel. Nat gas is here to stay, and oil is always going to be here to power commercial vehicles, aviation, and so on and so forth. So, what role does private capital play in all of this? Well, oil and natural gas production is actually a US-wide thing. A lot of people who even know anything about oil and natural gas production think it's just done in Texas. Well, as you can see from the map, these red areas on the map are oil and gas producing basins, and you can see right from the east coast to the west coast, including here in California, we are producing oil and natural gas. What's overlaid on the slide in the blue boxes is the portfolio of investments Quantum has across the oil and natural gas space in the United States. These are companies we either own, companies we formed, or companies we finance. Interestingly, private capital plays a huge role in upstream oil and gas in the United States. Of the 80% of our baseload energy, which comes from oil and gas, private capital provides 36% of that supply. Private capital are also the innovators. Private capital goes into areas, goes into basins, goes into rocks where the big super majors don't go. They only play in the safe spaces. Private capital drives technology innovation, unlocks new resources, and also unlocks new technologies for ESG. Certainly here at Quantum Capital Group, we believe that low carbon production is not only the right thing to do for the environment, but it's actually good business. When we come to sell a business that's well digitized with a low carbon footprint that produces reliable natural gas is worth a huge premium in the market to one that's a dirty, energy, high emissions company. So good for the environment, good for us as investors. So just going back to this slide very briefly, these red basins, these are quite big. As you can see, they cross states, they cross sometimes multiple states. They can be as big as 80, 90,000 square miles. And so you can drill a lot of wells in 80, 90,000 square miles of land. However, when we come to doing transactions, or we call them assets, assets are subsets of that basin, subsets of contiguous acreage upon where we will look to buy ownership rights on the land so that we can drill oil and natural gas wells. I'm not going to spend too long on this slide other than say this is like the classic private equity life cycle. We raise money, we do our deal sourcing and deal due diligence, which is where I'm going to spend a lot of the time in the rest of this presentation. Then we actually buy and grow the asset, add value to that asset, and then we'll sell it to a super major oil company or we'll IPO it on the stock market. And then hopefully we'll bring that money home to our investors with a nice premium and appreciation on their capital. So deal due diligence takes a huge amount of work. Why? Well, much like the weather, when you're forecasting the weather, you're playing with a huge data set, trying to work out exactly where a hurricane's going to land or what weather patterns are going to be doing over the next 10, 15 days. Well, here in oil and gas, we're actually trying to work out what's going on subsurface, and we're trying to forecast what is actually going on beneath the ground, and if I drill a well into the ground, how might that well perform? To do that, we have to look at every single basin, every single data point, every single square mile of rock across the entire United States and Canada, at least where there's major oil and gas producing basins. Now, when we're deal sourcing, we have to go and build models across the whole of the United States and build an economic profile of every single piece of land by the square meter or square mile, and we have to work out how many wells we can still drill on there, how many wells have already been drilled there, and what the return on investment look like. So you can imagine doing that by hand would take an army of people, and this is where Databricks comes in for us. When we're actually doing a deal, we will get data from the data room, from the person who's transacting the asset, and we can study that data alongside our assumptions made in our data set. But when we're actually deal sourcing, when we're scanning for new business, we have to look at the whole entire United States looking for opportunity. And that's what I'm going to touch on more today in this in the coming slides. So getting to that, this is the sort of data that we deal with. Now, this isn't the entire United States. I've just broken it down by one one producing basin. But over there on the left-hand side of this chart, that is the data set that we have for the entire United States. It's 1.5 billion records. And fun fact, the first well was drilled in the United States in 1859, and there's over 7.5 million wells in the United States today. The problem with that is not all of them are producing, but we need to know every single well that's ever been drilled, and we need to know every single hydrocarbon that's ever been taken out of that, because that tells us how much oil and gas is left in any given point in time. So the abandoned and the no longer producing wells are just as important as the wells that are currently producing today. So that being said, we have to build a map of every single well that's ever been drilled in the United States, and then we have to work out what truly came out of that well. If you go and try and look at records from 1859 or 1900 or 1920, these are not the most reliable records. So what we do is we source data from 6 or 7 different data vendors who scrape all of the government websites and then aggregate all of that data for us. However, these data vendors all give you different numbers for the same well. So you're paying for 6 different data sets to get 6 different versions of the truth. So what we've done over the 27 years in Quantum Capital, and certainly over the last probably 10 years of digitizing all of this, is we've built up a proprietary cleaning, validation, and survivorship rules, which is a greater than 125 rules. We've got all that loaded into Databricks now. But then most importantly, what we do is we do a whole bunch of algorithmic enrichment on that data. And then we do a whole bunch of inventory, which is working out where we can drill new wells. We do a whole bunch of forecasting based under different oil and natural gas price conditions. And then we work out which parts of the US and which basins and which acreage has the best possible return. So ultimately, to conclude on this slide, what we're doing is we're taking 1.5 billion noisy, messy, who knows what the real version of the truth is, and we boil it down to 600 million usable records upon which we base our investment decisions. Now, when I say we base our investment decisions, this is just the first step. The second step, which makes our data set unique, is how we enrich that 600 million records. So over time, Quantum Capital Group has had the, luxury of being a private equity company that's solely focused on energy. We've transacted a huge amount of assets in our career. In fact, we've deployed over $30 billion of capital in the energy space. That means we've been privy to a huge amount of data. And the one thing that doesn't change is the rock. And so the more data that we see and the more portfolio companies we've owned in this space, the better understanding of the source rock we have. We believe we have a better understanding of the source rock than any publicly traded oil company, and we believe we have a more comprehensive view across the whole United States and Canada than any other publicly traded oil company. And what this slide seeks to show you is, once we get that golden cleaned up data, the first thing we do is we overlay our geologic maps. And our geologic maps, essentially what they do is, we're using unsupervised machine learning, and Databricks is doing all this for us. Unsupervised machine learning to work out geographically similar areas of rock. Geographically similar areas of rock are, if you drill a well in that rock and you drill the same well, you should in theory get very similar production. But you've got to work out where that rock starts to change. Remember, we're talking about 80, 90,000 square miles, and so you've got to start working out where oil starts turning into gas, where there's less hydrocarbons, and so on and so forth. So the first thing we do is we build geologic maps. Then we build those ML models that tell us where, which is the slide, the screen on the bottom left there, where we work out the geologically similar areas. From there, what we do is we build an average, what we call production type curve for each one of those geologically similar areas, which means whatever well we drill in one of those geologically similar areas, we should get a production profile that looks roughly like that. All wells will perform slightly different, but over the average, we should get production profile that looks like that line. Then what we do is we generate remaining inventory, and remaining inventory is how much land is left in that basin that's not being drilled on. And that's not an easy challenge, because you can't drill over cities, you can't drill over rivers, you can't drill over Air Force bases, you can't drill over airports, you can't drill over nature reserves, and so on and so forth. So it's actually quite an interesting challenge trying to work out where you can drill a well. And not only where you can drill a well, what's the optimal spacing of those wells so you're not putting them too close together, but you're not putting them too far away that you're still leaving some oil and gas in the ground. So the remaining inventory is a real challenge, and it's a really unique algorithm that we've developed over time at Quantum. The last thing on this slide is the right-hand side. So all that boils down to is, for an entire basin, in this case this is the Eagle Ford Basin in Texas, Quantum Capital Group can produce an economic tierage of all the remaining inventory and we can put an IRR against every single well that's in the Eagle Ford Basin. From there, we can go and look at who owns those land, we can value that land, and we can start to make business decisions, investment decisions, and maybe start to try to buy that land. At the same time, if we're coming to sell an asset, we can also use similar logic in reverse, where we can start working out how to market our asset to get the best possible returns for investors. So that's really what we do, that's why it's unique, and this gives us a much differentiated insight into the whole of the United States when it comes to oil and natural gas production versus maybe our competitors. So, long story short, I won't spend too much time on this. Over the chart on the left-hand side is the yellow. That's some acreage a seller tried to sell Quantum Capital Group. The multicolored chart next to it is where Quantum Capital Group overlaid our golden data. And net, what the seller said was they said there's all of this remaining inventory that's economic. Quantum ran our golden data, said actually you're wrong, and you've overestimated that remaining inventory by 100%. So in this case, we managed within a couple of hours to work out that this person that's marketing the asset had completely mischaracterized the asset. Maybe deliberately, maybe not, I don't know. But the point is, this saved us from making an expensive investment mistake. And to that end, it doesn't just help us from making expensive investment mistakes, it also allows us to scale our business. Over the past 3 or 4 years, Quantum Capital Group has managed to use this data set to see a 3 times increase in deal flow. We've added 1 or 2 more people to our deal diligence team, but ultimately it's been the data that's allowed the business to grow. That's allowed us to see even more deals, which has allowed us to collect even more data, which further enriches our golden data set to make our golden data set even more valuable, which only gives the flywheel effect for us always having the best data set in the business to make investment decisions. So how do we do it? Well, kind of interesting. We were old school. When we started using Databricks, it was 2019. We were using Azure Data Factory, and we were using Hive. And we cobbled the whole thing together using notebooks with Python, and we just hoped for the best. And ultimately what happened was, we were just generating millions and millions of records in data sets. And our deal team were trying to decipher it in Excel or in Spotfire or what have you. Come 2024, well, the reason for doing that, actually, just to take a step back, was mainly because of COVID. This all grew up during remote working during the pandemic. During 2024, we realized that not only had Databricks as a product moved on, but our understanding and use of Databricks had moved on. And so what you're seeing here on the right-hand side is the benefit of what happened when we moved from Hive over to Unity Catalog. And I won't labor on this, but I will summarize this by saying, really what happened is, by moving from ADF and Hive over to Unity Catalog, we went from creating data sets to finally creating a data product that's consumable by the business. And that had a huge impact on not just service quality, on customer satisfaction, and on adoption of the data. And I'll show some examples of that in a bit. So ultimately, what does Unity Catalog look like to us? It's not just a product, it really is our platform for doing end-to-end distribution. So our data vendors, we're now federated out to those data vendors. That saved us 50-60% of ETL code. On the back end for our data engineering team, they've got a visual environment to work in where they can, with Lineage now, where they can turn around any bugs or issues very, very quickly. On the front end, we've got a fully governed data set, and we actually let our own deal teams and petrotechnical analysis teams build their own applications. Before, we would build the applications for them. Now we let them build their own applications, and we just provide the data as a product. And that's gone a long way, again, to improving customer satisfaction. I won't labor too much on this. We use a standard medallion architecture. We pretty much use the Databricks Unity Catalog environment end-to-end. We use Databricks workflows. We use the bronze, silver, gold. We run in Azure. We run in a data lake. And we do most of our reporting through Power BI. TIBCO Spotfire for more in-depth analysis, and we also use Esri ArcGIS for geospatial data analysis. And then downstream, we also have our own in-house software developments, and one thing of note in there, we have something called Quantum IQ, which is our own generative AI platform where you can interact with this data in a conversational way. That gets used somewhat, but certainly not as much as the Spotfire kind of apps that we build. Very briefly, I'm sure this is familiar to everyone, but this has been a game changer for us, as I'd said. Having this integrated platform for our data engineers has been superb. We have it hooked up to our Teams channels. We're deploying through Databricks asset bundles. We can see how we're using our compute, and it really is improved the satisfaction amongst our data engineering team. The Databricks workflows. So I talked about that economic workflow for the Eagle Basin in Texas. Now we have a visual way of looking at it, a visual way of managing all these notebooks. We can run all of our models in sequence. We can see all of the logs all in one simple way. And again, this allows us to build, modify, and debug any workflows in a matter of hours instead of a matter of, frankly, it was weeks back in the ADF days. Unity Catalog's not just for the data engineers, though. It really has been a game changer. We are a company of 150 people, and our 150 people are doing 11,500 unique data queries against our golden data set every month. Think about that. Think how much analytics our deal and diligence team are doing every day. There's, 20 working days in a month, and they're putting 11,500 individual queries against our data set. That means they're mining that data, they're utilizing that data, they're running their own scenarios against that data. We're giving the power back to our petrotechnical diligence teams to do the best thing they can. And these guys are smart. They're essentially quants and analysts, right? They know how to use Python. They know how to use Spotfire. They'll build their own tools to get the job done. So with that said, the next step for us now is we've discovered delta sharing recently, and delta sharing is cool because we actually want to distribute our golden data set to our portfolio companies. We want them to have access to the same tools and technologies and data that we have, and now with delta sharing, we can do that without writing a line of code. So that is something we're starting to roll out, and we're also starting to see how many of our data vendors are also on the Databricks platform so they can delta share source data with us. The other thing that we're looking into heavily is replacing Power BI. Power BI is not popular in our company. Spotfire is, and we're thinking, can we replace Power BI with Databricks apps? Done some promising pilots, but we'll see how that goes. And then, of course, exploring Genie. We put a lot of money into building our own in-house Quantum IQ or in-house Gen AI. We're looking to see if we can kind of retire that and maybe replace that with some of the technology that's coming out from Genie. So now we've got strong foundations and a really good data product that we're proud of. We're looking at better ways to make use of that across our portfolio, across our vendors, and by further leveraging even more of the Databricks ecosystem. So finally, back to Tiger Analytics. I talked about a lot of stuff today, but Tiger Analytics certainly do a lot of the legwork for us. They are our technology partner. We have some super smart people in-house building all of our models, but at the end of the day, Tiger do a lot of the legwork on putting it all together. And it's not just up in the workflow I've discussed, it's across our whole company. So maybe I'll hand it over just to finish up back to Vishal, and he can close it out.
Yeah. Before I forget, we do have a booth to visit us at the Tiger Analytics booth. But we do for QCG, we work across their portfolio companies to not only enable the data value chain, modernizing the data, building ML algorithms, enabling Gen AI use cases, building reports, rationalizing data. But we do work as a digital enablement partner across the portfolio companies. It's been a fantastic partnership, and thank you for the trust. And there's a lot of things that we have learned through this engagement, especially the data domains and the sources of data. Learning about them has been a big enrichment for us as well as a service provider. So thanks for the audience, and we'll leave you with that. Do visit us at our booth.